What I love to do is introduce the right people to the right people.
I assemble the smartest people I can think of or reach out to carry that conversation, and that's exactly what I've done today.
Please give my panel a round of applause. Welcome.
Okay, what's up guys? Jay Martin here, CEO of Cambridge House, and I'm joined right now by Gianni Kovacevic, an investor, author, modern energy expert. Gianni keynote speaks all over the world, including at many of my events over the years. Gianni, it's great to see you.
Greetings from Zagreb, Jay, and it's a very timely update. We're going to talk about energy, commodities, and this trend, this decoupling of old energy from new energy. And of course, we're talking about electrification and copper.
I love it. I love it. I'm excited to dive into this with you. And as you just mentioned, Zagreb is 100 kilometers away from the birthplace of your hero, Nikola Tesla, correct?
Indeed, he's Serbian, but he was born in Gospić, Croatia, and both countries celebrate him. And he's the man who invented modern electricity, and everything comes to the fold. There's a company based out of Northern California named after him, and they are a energy disruption company. They're changing the way things are done. And now as everyone piles into this trade, it's on. And now you have, to fan the fires, everything's, becoming commercially viable. And now they're going to invest in excess of $10 trillion to accelerate this pivot towards, they call it the Green New Deal. Some call it renewable energy.
Sure. I
call it copper. The greener and cleaner that we create, transfer, and utilize energy, the more that is demanded of copper. We used to talk about the growth rate for copper and what's going to happen. Don't lose any sleep at night. Let's not spend our precious time talking about the demand, because it's going to be, ladies and gentlemen, middle of the case scenario, 6% CAGR growth rate for copper for the rest of this decade and going into the 2030s, as we go from 20% of final energy usage today, which is electrification, and that's going to go to 50%. We used to say 2050. Now it's going to happen probably by about 2040 with all of these accelerations, which means as much copper as was installed from 1890 to today, we will duplicate that, but in the next 20 years. The real thing people need to be focused on, the opportunity, where's it going to come from? That's what we're going to talk about.
Okay, Gianni, I love your passion. It's so great to connect with you. Okay, look, so you talked about a lot of big things there, and yeah, call it whatever you want, Green New Deal, you call it copper, but you know my audience, Gianni, they're retail investors. They're just like me. They're looking for the smartest home for their capital. And so when it comes to the copper sector, what should investors be focused on? And you just mentioned location. And I guess my curiosity goes, where is this copper going to come from? Not necessarily the mines, but the countries. And what's on your radar?
Well, Warren Buffett likes to invest in businesses that have a protective moat. The copper mining business has many moats. One, the technological moat. We haven't had a lot of advancements like they have in oil and gas and other things.
Sure.
And geologically very rare, very scarce. Where are the deposits that we found? Where are the current mines that are in production? Happens in very few countries. So we can look at the data where what used to be a bigger arena of companies, when the China super cycle started, there was a lot of mergers, acquisitions. A lot of those companies are gone. So you really have to focus on only 13, 14, 15 CEOs of the major copper mining companies or integrated mining companies. What are they doing? Where are they mining today? And where will they mine in the future? And these companies collectively, including a lot of the guys that present at your shows, the industry spent over $100 billion looking for, delineating the future deposits. And we can actually look at that data now, and we can extrapolate where's the future of copper mining, of the stuff that's being built, and what's it going to cost for these companies to actually build these projects. You can aggregate, and many people have done this, and just to accelerate people familiarity, when you look at the analysts that look at what's the CapEx for the next wave of copper production, there are about 21, 22 projects being built right now that will give us metal by the year 2025. Right now, before cost inflation, $65 billion, which will give us a metal yield of 3,300,000 tons. That means the CapEx per ton of production, the intensity is now $20,000 per ton of production. Let me clarify what that means. So if a company wants to produce 100,000 tons of metal out of a project, we know based on all this hard work, all these studies, it's $2 billion for every 100,000 tons of metal that project will eventually produce. It's ruinously expensive to delineate these projects, to build them, and it only gets worse because the next batch of projects, I'm talking 2025 to 2030, a lot of them may not even be built. They're in funky places. A lot of them are having a hard time with permitting. The costs before cost inflation, because certainly if all these commodities are going up in value, there's going to be cost inflation. But before that, based on the studies that they've completed, it's now going to be $2.5 billion for every 100,000 tons of metal production. So they've got some tough choices, these CEOs. They basically have four options. And one, they're going to have to go to high elevation. We're talking about Peru, Chile, Ecuador, perhaps. Right. And number two, they're going to have to go to politically less stable jurisdictions or places that do not have a long established copper mining culture. Or they're going to have to go to historic copper mining camps like Australia, like Arizona, Nevada, British Columbia, Quebec, and the places that they're already comfortable. And the fourth option, of course, is to simply go and look for new deposits. That's not going to help us for the next 10 years because it takes, on average, from discovery to the bankable feasibility study when the decision's about to be made, 20 years. They don't have the time. They need to accelerate that, which is why you need to look at companies that have established deposits that are at, say, year 15, that are in good locations, because I cannot underline this enough for your audience. I don't think these companies are going back to some of the sensitive areas. I can give you many examples. I'll give you one. Reko Diq, it's in Pakistan. It was a joint venture 50-50 with Barrick in Antofagasta. Now that project's basically been dropped and they're looking for some kind of remuneration there. Who will eventually develop that? It is not going to be any stock listed copper mining company. And it's not, I don't believe it's something that's going to be built in the near term. And there are other such projects. It's going to be tough, which means it's going to be hard for these companies to replace copper production.
I'm with you. And that's been an increasing theme in the conversations we've been having on this channel is jurisdictional risk, right? And so you called out one project, but I guess what I'd love to hear from you is where are companies going to be comfortable looking? Therefore, where should investors be comfortable looking when you're looking at those further developed deposits?
The number one jurisdiction in the world, in my opinion, and this is based on many, many interviews. And remember, I did the keynote at Santiago, Chile's famed copper dinner in April of 2017, where the who's who of the copper mining and fabricating industry gets together. And I was invited to keynote that conference. I know a lot of people in the copper mining business, and I can tell you that from my discussions, Arizona is the number one jurisdiction in the world if they could have a deposit of merit. And the rest is the rest. I do believe that Peru and Chile, there's a big future there. Peru's had a lot of development. Maybe they want to decelerate that and sort of digest what they've already built. And Chile. But you have to pay for this stuff, Jay. The reason the average is $2 billion for every 100,000 tons of metal capacity is because these projects, you have to pay for the water, the electricity. To build the mine, you got to move, 2,000 guys, maybe 3,000 people to build it. And you have to have maybe 500 or 600 people working there for 30 years. All of these things have to be paid for. So when you're talking about that CapEx, so let's just say a large copper mine is actually 200,000 tons of metal. So based on those studies that I just talked about, that would be $4 billion on average to construct a project that could give you 200,000 tons of metal yield because you have to pay for all these things. But what we have in Copperbank, and I need to segue into that because I think Copperbank is something people should be looking at. Our flagship project is located in the famed copper corridor of Arizona. This is the area that was the largest production area of copper in the world for 100 years until Chile surpassed it. They have a long-established copper mining culture. All of the infrastructure that's required is, let's say, more or less there. United States has one of the lowest tax regimes in the world, 21% now, as people will recall. Even if the Biden administration raises it a little bit, it'll still be amongst the lowest. So what does it cost to build a mill that will operate 0.4, 0.5% copper in Arizona that will give you 100,000 tons of metal? The answer is about $700 or $800 million. That is a power of magnitude cheaper than these other projects. So what else must you pay for? Well, in our case for Copper Creek, and I want to be very specific, our strategy is to move the project forward with an open pit scenario. So there's 4 ways that we can create value as we pursue this strategy. And that's important because, as I just articulated, this should be a relatively low CapEx project to build compared to many of our peers. And as we pursue that with the drill bit, with optimizations, with trade-off studies, and incorporating a higher copper price. The studies that have been done at Copper Creek are historical in nature. Copperbank does not consider them to be contemporary, but they were done to a 43101 standard, so we can use them with that caveat. What did those historical studies tell us? INC out of Tucson, Arizona did an open pit resource calculation for Copper Creek, and they released it in the year 2012. And they used $2.90 a pound copper.
Okay.
And if you look at a block model for a project like that, you have to, they used a 0.2% copper equivalent cutoff. So can you now use a 0.15% copper equivalent cutoff using a higher copper price, because now that ore becomes more valuable? How many blocks at Copper Creek are we going to be able to bring in using that sensitivity? We're going to look at adding some other byproduct credits that were not included. So will that increase the value of certain blocks? And most importantly, if people have been looking at our news flow, we are going to deliver a tremendous amount of news for the balance of this year and into next year, because we're looking at, as per my past press releases, to establish a 20 to 30 drill hole program to look at nearer surface resource. So we want to add value with the drill bit. Okay. And that's important because we're focusing on these hydrothermal breccias. There's the highest concentration in North America occurs at Copper Creek. It's at the geological intersection of the 2 major trends of Arizona. And it's endowed this area with these in excess of 400 breccias. Only about 40 have been drill tested to date. So our consulting geologists they're at the field right now, and we're looking at using a leapfrog model and a lot of other data and science to come up with a multi-phase drilling program so that we can as well endeavor to add more resource near surface with the drill bit. So all of these different initiatives will culminate in a resource update, which our consulting geologist Mark Fowl will do for probably early in 2021. Okay. And what will it look like? What will the size of this resource be? Because based on that historical resource estimate, it's already 500 million tons of measured and indicated at 0.44% copper. And then we have an additional 490 some odd million tons of inferred at 0.34% copper. And that's important because if you look at the grade of the 7 or 8 largest copper mines in Arizona, what's the grade, Jay? 0.3, 0.32, 0.4, 0.41. Grade's pretty good at Copper Creek. So we think that it is a prime target for a major mining company to come and look at Copper Creek and look at that as being that it's at year 15 in that 20 years sort of for discovery hole until you move it towards more of a bankable feasibility study stage. Right. I'm the custodian of the project. It's crystal clear. I'm not going to be building any copper mines. And we look to do something potentially in a very creative way, because I can't eat my shares, Jay. I want to highly motivated the team. Yeah. A lot of time strategy.
So a couple of things you said there, I just want to pull on. We have a lot of gold, silver companies on the show and a few copper companies, notably less, just because there are less that I think investors should take a look at. The core reason is that the exit strategy for a copper exploration development company, sort of the exit strategy, there's far fewer of them compared to a gold, silver project, right? If you're looking at, developing an economic gold deposit, silver deposit, or looking for that exit, that acquisition, your opportunities are numerous compared to the copper sector. To your point, the likelihood of, you said it, you're not going to build a copper mine, right? And your suitors are far fewer than they are in the precious metal sector. And I harp on that investors have to focus on that. When you're looking at copper projects, you can't apply the same rules as you would in the precious metal sector.
No, you can't, Jane. You have to look at location once again. Of the 21 projects currently being built, where are they? Russia, Kazakhstan, Congo, Serbia, Chile, Peru. They want a project. They're going to want projects in places like British Columbia, like Arizona. I told you before, they spent $100 billion collectively looking and developing these projects. Using the data, a lot of misses. Do you know that it costs to establish a measured and indicated pound in the ground costs now 4 cents? 4 cents. So if you want to find, based on those historical studies at Copper Creek, we've got 8 billion pounds in all categories, and people must look at the tables on my presentations to understand that talking measured, indicated, and inferred for Copper Creek on a historical study, but it's 8 billion pounds, all categories. It would cost, based on those averages for these companies, 4 cents times 8 billion pounds, you do the math, 300 million bucks. That's why in the last cycle, what was the average transaction value for, and there's 30 transactions to look at. They ranged from 3 cents to 10 cents a pound in the ground. I believe, because the copper price is now near an all-time high, and it is never going to be, I believe, a better 10 years for the copper mining and fabricating industry. Because it all starts with the cable makers, the motor makers, the transformer guys. Business is going to be better than it has ever been before. They are going to be buying lots of copper, which means the copper miners are going to be producing lots of copper, and they need to replace reserves. So I believe they're going to buy resources. They're the ones that are going to be able to convert them to reserves and put them eventually into production. But it can only happen with a higher copper price. And they will pay because they've done it historically, and they know, Jay, they know you don't get lucky. You don't delineate a measured and indicated copper pound at 4,000 meters or in Russia or in the Philippines or in Papua New Guinea, because it's ruinously expensive. So is it plausible that something like Copper Creek, we're trading at 1/2 of 1 penny per established pound in the ground? Here's more metrics for you. Copperbank acquired projects from other listed companies. We have 81 million shares outstanding, and we're not going to have a lot of dilution. We own everything on a 100% basis, okay? We're trading at 60 cents, so our market cap is about 48, 50 million Canadian. The previous market cap high of everything we own would be like $3 a share for Copperbank. That was once upon a time. More importantly, there's $120 million of paid drilling, engineering studies, metallurgy on the portfolio from previous operators. That's $1.50 a share. So I can tell you, just in our own personal experience, it was like 2 cents a pound to delineate what's there so far. Now what we have to do is answer some unanswered questions. So spend a few $1 million to build it and they will come, which can segue into a multi-phase drilling program. If we have success, we can continue to parlay that into additional programs. And we are not sellers at these prices. So we're looking at, as my consulting geologist always says, I just said it, build it and they will come. We want to show the industry that this is a project that we believe is definitively has a shot at being an open pit based on the metrics I just talked about. It's initiative, it's drive, and it's a company I think people can look at. Why would a retail investor want to look at Copperbank? We're owner operators. We don't need a lot of dilution. Through the entire bear market, Jay, we did not issue cheap warrants. Every single financing was done above the market by our group, and we raised just enough to pay for the property taxes and our holding costs, which are very low. So in the future, we don't have to raise a lot of money to pay for these things. Another reason they want to look at Copperbank, it's diversification, it's growth, well-situated projects, and you are not going to have dilution unless it's accretive, and it's cheap. Compare us to our peer group. Fundamental Research put out a research note today, or a couple days ago. Their fair value target based on their document is $1.78 a share. people can look at that document and they'll be able to get it from Copperbank anytime they like. They can contact me if they wish. And you can go through it note by note, detail for detail. Why do they think that? And more importantly, how can we unlock more value with the various businesses? I've only talked about Copper Creek today. We've got Contact, a royalty business, and some very exciting exploration projects. And that's why Copperbank really is a one-stop shop for a retail investor that wants highly accretive, high torque exposure to copper with a dedicated team that is fully aligned with all of our shareholders.
I love it. Gianni, I think that's a great place to wrap it up. Thanks so much for coming on. It's always a pleasure to connect with you and another Vancouver guy, even if you're in Croatia right now. I'm glad we could do it.
Indeed. And people need to look at my book again, Jay. It's very topical. Nothing is stale dated. All the things that I wrote in there are now happening. And we say, never invest in the story on page 16. Invest in the story that's headed to page 1. So we're somewhere in between. It's almost going to be talked about. And when you start hearing people like Bill Gates and Warren Buffett talk about copper, you know, it's interesting.
I'm with you. It's definitely the narrative that our audience is most curious about. And the book is titled My Electrician Drives a Porsche. It's a fun read, it's super educational, and I highly recommend everybody pick up a copy. You can probably grab it it's Kovacevic.com. Is that correct?
It's on Amazon, it's an ebook, and it's even on audible.com now. So it's in German, and people can, they can read it as they wish. I think they'll really enjoy it. If they like some of the stuff we talked about today, I think they'll really find it. It's a page turner. It's written like a novel to make it more interesting.
It is. Okay. Thanks so much, Gianni. I appreciate it.
Thank you, Jay.